So we will discuss about what are the current regulations for cryptocurrencies and what should ideally be done in the future. All right. So in this slide you see that the growth of crypto market, back in March 16 it was less than $50 billion, but now it is well over $300 billion. I think for November 17 it was more than $300 billion, and then it came down to, let's say, $100 billion and again went up during the Corona times. As we speak right now, the market is very down, so I do not know what is the current level of market cap for crypto, but as per July 2019 it was over 200 billion. So there is a steady increase in the crypto assets, and it's quite significant actually. If you are familiar with the asset classes in bank, over 200 billion is actually considered a very large large market cap, and it is therefore very important to regulate, otherwise it will have various kinds of risk, not just for the people who are involved, but also people who are not directly involved in trading cryptocurrencies. For example, the formal financial system could also be affected because of issues in the crypto market, and that could affect normal people who have nothing to do with cryptocurrency, but they may have to pay a price for that, and hence it's important to regulate. And more recently there's some discussion going on in various forums in various international bodies. For example, IMF is discussing, debating. ECB in the Europe is debating. US Fed is doing that. BCBS, the Basel Committee, is also doing that. And there are some of the topics which are worth discussing, and we will take some of these points. We'll discuss some of these points. So what are the risks involved in cryptocurrencies? Some of you might know that it's a highly volatile asset. So highly volatile asset, any highly volatile asset is associated with the risk of losing money. So it's a huge risk for investors, people who are holding money in crypto asset, that they could lose a large part of their assets actually, right? And this has happened more recently in the last few months, right? Many people have lost money in cryptocurrencies. Now there are individual investors, but there are also institutional investor, right? And what happens when institutional investor lose a lot of money, it has impact on the whole financial system, not just that particular organization, but also other financial organizations. And this might create a trickle down effect, and many other organizations will be affected because of that, and hence it's so important to actually regulate. There are many other types of risks, right? Whatever type of risk you face in a normal financial institution, those risks are also felt in any digital asset, be it cryptocurrency or other digital assets. So you have operational risk, which is perhaps the most important risk involved in crypto trading. Operational risk comes from the fraud and the hacking and all these instances, and there have been many instances of hacking in the past, so that's worth noting. Many people have lost money because of fraudulent activities, because all these things are happening online, so chances are that fraudulent activities would happen, and these activities have happened in the past and will likely happen in the future as well. Then you have also credit risk and market risk. Credit and market risk both are associated with the formal financial system, right? But even in cryptocurrency you have also credit risk, right? Whenever you make a transaction, there is an involvement of credit risk. People tend to think that there is no credit risk involved. If they buy or they sell, the transaction will be the contract will be honored by the other party who is sitting on the other side, but that's not necessarily the case. Many people have lost money because of that. And then market risk, which is also a very big risk, because crypto is very volatile. It is very sensitive to the macroeconomic events, and hence you could lose money, the asset could lose its worth. And this has happened to many of these cryptocurrencies in the last few months, right? Even the big ones, right, Ethereum or Bitcoin were also affected in the last few months. So it's very sensitive to market events. Then you have liquidity risk, okay, and it goes without saying, whenever there is a transaction involved, there is liquidity risk involved. And fraud risk, we have already discussed. Fraud risk is also is a very, very important risk to take into account. Because of these risks, it's very important to regulate cryptocurrency market. There are some regulations in place. Like in some of the countries you have more regulation than the other. In fact, some of the countries have banned crypto trading, for example China, and in some other countries, for example in Indonesia you have more regulation, in Malta you have more regulation. So we'll discuss these aspects. So here is this plot of how much money was involved in fraud risk. If you see this graph, this actually is increasing over time. In 2019 it was close to 400 million US dollar. So that was the amount of money which was involved in fraudulent activities in crypto space. And see here the volatility. I was talking about the volatility of this asset. So here is this graph showing the volatility of crypto assets with respect to the volatility in other financial assets. For example, the S&P 500 index, and you see that the volatility is much higher for crypto assets compared to a formal financial asset such as S&P 500 index. If you just zoom in, in January 2018, you just see the volatility is well above 180, where it is for Bitcoin 180%, by the way, 180%, right? That's huge actually, compared to S&P 500 where the volatility is less than 20%, right? So that's much higher, something that many investors do not understand, and they go on investing in Bitcoin thinking that it's going to skyrocket, the price is going to skyrocket and it's going to go up a lot, without knowing that it could also go down a lot. So hence it's a very risky asset, and any risky asset should be properly regulated. We have discussed all the risks involved. We will discuss also more risk involved, which are not direct risk just to the investor or the person who is buying these assets, but also to other people, normal people who have nothing to do with with cryptocurrency. For example, AML or terrorist financing. For example, many terrorists are using cryptocurrencies to carry out terrorism, and many people get affected. Many people die because of terrorist activities, and these people were not involved in cryptocurrency market, but these activities were funded by cryptocurrencies. And because of the nature of the cryptocurrencies, it is very easy to actually use cryptocurrency as a medium to carry out terrorist attack, and we will discuss how it is possible, right? So there is a risk of misuse of money actually, right? Because if the money is not in the formal financial system, it can be easily used for activities such as terrorism, right? So a terrorist may not be able to open a bank account in a country, but he can easily transact the money through cryptocurrency, because there is no regulation in place. The KYC is almost non-existent, and then cross-border transaction is very easy, right? So one can move from one country to the other country without having to take money with him or her, and he can simply use his wallet, his crypto wallet, to buy guns, buy other ammunitions to carry out terrorist activities. And this anonymity of asset owner is also another issue in crypto market. The asset owner name and his address and details, the KYC details, right? It's not known to people. It's not, the data is not stored anywhere where the government or security agency can have access to. Anonymity is a big issue there, right? Cross-border transaction we have talked about. So it's easy to transact money cross border. Then you have no financial intermediaries involved in your transaction, unlike in formal financial system where transacting money through payment banks, through a proper bank, it goes through certain scrutiny. But in crypto space, nothing of that sort happen, so it's very risky therefore. And then you have no information sharing between jurisdictions about crypto, right? Because of the borderless nature of transactions. First of all, there is no data with the governments, and even if there is some data, currently governments are not sharing data, crypto data, with each other to regulate, because there is no any proper regulation in place. So these are some of the issues because of which even people who are not involved in crypto market, they will still be affected indirectly, if not directly. Then you have prudential and systemic issue. Again, that's an issue where many people, way more people than those who are involved in crypto trading, will be impacted, right? Many traditional financial companies are engaged with crypto directly and indirectly. They are directly buying crypto and facilitating crypto trading. That's happening. And indirectly, because many of the clients of these banks and financial service companies are involved in crypto. So if something goes wrong, then these banks will get affected, and many of these banks will go bankrupt. This has happened in the past for other reasons. For example, in 2008 financial crisis, where it happened because of subprime mortgage, where the proper risk management wasn't done. Banks went into highly risky areas they shouldn't have gone, and a lot happened after that. Now, because of crypto being a very new thing, many banks are interested to get into crypto, and the clients of many banks are also into crypto. So banks do not have the proper information of the clients they're lending money to. So indirectly, directly, some of these banks will eventually get affected if the crypto market crashes. And by the way, it's happening right now as we speak. And because of which it could have a very systemic risk. That means a countrywide risk, not just in the financial system, but also in the general economy might get affected because of this, right? Then many banks are involved in hedging instruments, right? So they are providing some kind of an insurance to companies who are involved in crypto trading, which is that hedging for your downside risk, and banks are taking risk for that. But you do not have proper data to do a proper risk management here, or to quantify the risk involved in these kind of transactions, and it's also not very transparent. So so that could pose a huge threat to the financial institutions, many financial institutions, even the formal ones, right? The banks and insurance company, pension funds, and it could have an impact on the overall economy of one country, could be also on multiple countries. So that cannot be ruled out. And then you do not have any regulatory reporting taking place for these kind of assets. So that is again so it's not being monitored properly, right? And we will discuss in brief about what are the regulations currently in place. But before that, even I can tell you that they're not proper regulation, but there's certainly some, but it's not enough, and it's not just I'm saying, even the regulatory bodies are acknowledging this, that the regulation that is in place is not enough. More needs to be done. So what regulations currently in place? So you have the public warning by many governments and central banks who have issued a warning to people that do not engage in crypto trading. If you do not understand this particular type of asset, do not get into it. Try to avoid. In fact, many central banks have gone on to say that just imagine that you have lost the money that you have spent to buy cryptocurrency. Just imagine that it is gone. You will never get the money back. Some of these countries have banned crypto trading altogether. For example, China has banned crypto trading altogether, and not just China. I think there are other countries also involved. Then some countries have rolled out tailored regulation for the crypto assets. Indonesia is one example. So what Indonesia has done is that it has introduced some sort of regulation. It's a tailored one because it's not exactly same as it has for other financial assets. It has tailored regulation for the crypto assets, which includes like licensing and regulation regarding security and to have minimum capital. So some form of formal regulation over there, and not just Indonesia. Even there are some other countries who have also started this. And then you also have some agencies, for example, the US Security Exchange Commission are using their power to actually sanction on some select cases. So that has happened in the in the US and in the Europe. And then you have FSB in the US. It has also issued a report. The name of the report is Decentralized Financial Technology in June 2019, which consider the financial stability and regulatory and governance implication of the use of decentralized financial technology, and crypto is one of them, right? It also covers about other digital form of banking. So these are some of the guidelines issued by governments and central banks. Then you have BCBS, the Basel Committee, is also collecting data on banks' exposure to crypto. It has happened. It hasn't happened at a large scale, but it has started happening. So there is some initial effort towards doing that, but it should be done at a much larger scale, in my view. So what's more needed? Well, first of all, not all the countries have got regulations about crypto trading. Only a select few countries do have this, and more countries need to come up with tailored regulation like you have in Indonesia and Malta. Then you have cross-border information sharing. So that's very, very important, because in the formal financial system, countries do share information among them. So that should be in place. Otherwise, terrorist financing, anti-money laundering, fraud, all those cases will be more in the future. The exposure of the formal financial system should be monitored, actually, to avoid prudential risk, to avoid risk for the general economy. It's important that the banks should be asked to report their exposure to crypto market directly and indirectly, directly and also through their clients indirectly. And then what's also important is that governments and central banks should make effort to educate people, general public, so that they can make well-informed decisions, because many people are entering into the market without knowing much. So a lot of people will be losing money, and that will have a lot of impact on the economy. And then you have disclosure regime, very super important. Many insiders from the crypto market have actually said this, that the crypto trading is not free of fraudulent activities, and so greater transparency is needed. So greater disclosure regime is very important for this market. And then there must be separate regulatory body for digital asset, because most of the regulatory bodies do not quite understand the details regarding digital asset. They do not have the know-how, because this is brand new in the market, and people who have been working there for decades, they have no experience with dealing with such assets. So there must be a core competency being developed in these regulatory bodies, particularly on these kind of financial assets. And then you have increased requirement for capital. It goes without saying, for any risky activities, there must be capital set aside for bad times, and it should be also enforced on the various organization involved in these kind of transactions. There are more, actually, right? Lot more can be done. Surveillance mechanism of the platforms is very important, again, for the sake of transparency. Then you should the trading information should be made public. Many people have complained about it, that the agencies involved, the marketplaces, the exchanges, they do not really share information. A lot of the price level information are available for other asset classes, right? It's there in the public domain, you can have access to that, but not about crypto, so that's a bad thing. Then platforms operating in this space should be made to comply with anti-money laundering. As it's very important, because again, terrorist financing is related to anti-money laundering, and it's very easy for those people, those fraudulent people, to do activities. So I think the platforms should be given the responsibility to have the requirement to report such cases on a regular basis. And then more regulation is needed to safeguard clients' assets. This has happened that many people have lost money because people think that the assets with the exchanges is safe, right? It's like buying a bond, you are guaranteed, you will never lose money. That's not the case. Many people have lost money, so regulation should be there for safety of assets, right? So if you have money in your current account or saving account, and the bank becomes insolvent, you will still get the money, because the government has guaranteed, at least to some limit, it has given you the guarantee. But that's not the case for cryptocurrencies, so that should be there. More countries should regulate banks for their crypto exposure. This has been discussed, but this is happening in some countries, some developed countries. But I think many countries in the world do not keep track of banks' exposure to crypto, and that's a very bad thing, because it could pose a systemic threat to the formal financial system and even the general economy. Then you have indirect exposure to crypto should be monitored, not just direct exposure. If the banks or insurance companies have exposure, have got exposed indirectly through their clients, that should also be monitored. And then the last point being, that more investment should be made on research and data gathering, data sharing. This is not happening right now, because, as I told, there is not a lot of research on how to regulate these asset classes. It's not known to people, so more research needed, and hence government and central banks should spend more money on research activity related to this. So before we end this, so I'm going to show you this particular chart. You see that the level of regulation on different areas of fintech, right? If we put everything in fintech, you will see that regulators understand crypto should be regulated the most, actually, because of the nature, right? The cross-border transaction, no involvement of formal financial system, because of which this is most important to be regulated. So that is arguably the outlier in this. On other activities, for example, algorithmic trading, mobile banking, even the formal financial regulations are applicable to those areas, not to the crypto, right? All the payment companies, mobile banking, neo banking, all these companies are being regulated nowadays through formal financial regulatory system, but not the crypto assets. So it is therefore so important to give a special attention, because it's a completely different business compared to other fintech businesses. Okay, thanks.